Ladies and gentlemen, good day and welcome to the Vardhman Textiles Ltd Q4 FY24 earnings conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Roshan Nair from Batlivala and Karani Securities India Private Limited. Thank you and over to you, sir.
Thank you, Sejal. Good evening, everyone, and welcome to the Q4 FY24 earnings conference call of Vardhman Textiles Ltd. On behalf of VNK Securities, I welcome all participants and the management of Vardhman Textiles Ltd to the call. We have with us today Mr. Neeraj Jain, Joint Managing Director, Mr. Sushil Jha, Director Raw Materials, Mr. Rajiv Thapar, CFO, Mr. Mukesh Bansal, Head Fabric Marketing, and Mr. Varun Malhotra, Head of Finance. Without further ado, I would like to hand over the floor to Mr. Neeraj Jain for his opening remarks, post which we can have a Q&A session. Thank you, and over to you, sir.
Thank you, Roshan. Good afternoon, everyone. So the results are before all of you. There is some improvement in the results, but I think those uncertainties are still continuing. This was a period where we saw huge variations or huge swing in the cotton prices, both in India as well as outside. So majority of the cotton comes in the period October, November, December to February, March in India, and this was the period where the peak arrivals were there. So if you first look at the international prices of cotton, it was stable at about 83-84 US cents per pound, and in between it increased to almost 97-98 cents, then came down to 74-75 cents, and as of now 77-78 cents or so and so on. So which means there is a huge swing happening on the international cotton prices because of various factors, that it's not related only with the cotton, it's related with the, I think, overall interest rate cycle, overall commodity cycle, and the overall issues which are beyond cotton. But of course, since the cotton is a part of that, we have to understand and we have to look at what could be our best strategy for coverage of the same. In this period, the Indian prices started at a lower tone. The effective MSP for Indian cotton as of now is in the range of about 56,000, 57,000 rupees a candy. And when the cotton started coming in, because of the lower demand or because of the pressure on the overall textile, the cotton prices were lower compared to even the minimum support price. As a result of that, the CCI started operating in India, and they accumulated almost 32-33 lakh bales this year in the initial period, especially in Telangana and the down south. Of course, they did some operations in Maharashtra and Gujarat also, but majority of the operations were in south, where they accumulated almost 32-33 lakh bales of cotton. The prices, since it was lower in the rest of the market, so I think mills started covering and trade also started covering cotton at those prices. Look at the cotton prices, most part of the season it was ranging in the range of about 56,000 rupees or so, which is almost 85-86 US cents delivered in India. Compared to at that stage, the New York future was 83-84 cents, so that means the Indian cotton was available only at about 1 or 2 cents on, which seems to be quite a reasonable level when it comes to the overall risk strategy to that extent. So Vardhman also started covering the cotton, and we covered most of our cotton in this period. Last 2 years, we have seen very different scenarios where we did cover the cotton because of quality, because of the prices. But this year, I think our normal buying started happening. We covered most part of the cotton as usually we do in the normal times, both because of the commercial as well as the quality constraints. So that's one part that we covered it. And immediately after that, the New York future started going up. As a result of that, the Indian cotton also from 56-57,000 went up to almost 64-65,000 also. But again, once the New York future started coming down, the Indian prices also realigned. And as of now, if you look at the New York future at 77-78 cents, and the availability of cotton internationally with 1,000 on or 900 on is close to about 88 cents. Indian cotton also, as of now, the market is available at 87-88 cents only, which means there is some disadvantage for the Indian cotton pair on a pair without looking at the duty component in that. But if we add the duty component, then maybe the Indian cotton is cheaper by about 2 cents, 3 cents only. So that's on one hand. Two, this means the price of cotton was increasing both internationally in India. There was some improvement in the yarn prices also in this period. And prices from a normally which was dealing in the range of about $2.90, $2 or $3, went up to $3.20, $3.25 also. But of course, as the cotton started coming down, the prices also were aligned and they started coming down. And as of now, I think international prices would be in the range of about $3.10 or so on a cotton base of 78 cents, cotton base of 88 cents. So of course, this helped us in the some improvement of the overall margin on the spinning side. In terms of utilization of the spinning in India, our expectation or our feeling estimation is that it's in the range of about 70-72%, and still about 18-20% capacity is unutilized, especially the smaller segments, where I think maybe because of the margins or maybe because of lesser demand in domestic market, there seems to be some issues and challenges. When it comes to the export of yarn, India is doing almost 105, 110 million kg per month, which is the normal export which we were doing pre-COVID also. So I think in terms of of course, the prices are a challenge, but in terms of export of yarn, there doesn't seem to be any question mark or a concern. So the normal quantities are going, which means still there is a pressure on the yarn prices, which means the domestic segment, the demand is a little lower, which is not allowing the prices to go up. On the fabric side, things continue to be better, and we are still utilizing all our 100% utilization. As we mentioned in the last 2-3 calls, as once the people started going to the offices or the work they started happening, I think there is definitely an improvement in the overall weaving consumption, and our weaving region is doing well, and we are running all the 100% capacity utilization on that consume. The third is we have announced now some capex. I'd like to give the details of the same. There were 2 announcements which were done before in 2021 and 22, where we have announced increase in the spinning capacity twice, but I think we have withdrawn that, and now we have looked at a fresh investment, which is both in terms of the expansion, modernization on the spinning side as well as on the fabric side as well. On the spinning side, we intend to put up a open-end project. I think that's one expansion, where in addition to that, we are also looking at major modernization in the spinning sector. So normally we do almost about 150 crores of modernization every year in the spinning. But this year there is a special project taken where we are looking at a productivity improvement. We are also looking at strengthening of our shop floors, where more and more number of products could be produced at a right quality. And also, I think it's our policy to keep investing and modernizing our machine parts so that the customer doesn't have a disadvantage at any stage. So this year we have taken a special project where we are looking at modernizing spinning in a bigger way. I think the overall capex on the spinning side, including the expansion, could be in the range of about 1,000 crores or so, which is estimated. And we expect most of the spinning modernization and the project should be completed, I think, by March, April 25, May 25, as 1 year from today. On fabric side, there are 2 major projects which are undertaken. One is the modernization as usual, which we always keep looking at. This modernization includes the debottlenecking also, so that we could increase or enhance some of the capacity. And also one man-made fiber-based project has been taken for the man-made fabrics, which was India, I think, we are very, very, very weak on the man-made based products. Since most of the consumption, the world is going on the man-made now. So I think to support the industry, we have decided to go in for the man-made fabric, and I think this project will also be completed in the next 1.5 years or so. So I think the capex on this plant would be in the range of about 300 odd crores, the first phase, and then looking at the success or looking at the optimization of this, we would be looking at the next phase of expansion only after that. In addition to that, this year we are taking a special project on our green power also. So today our green power is only about 2.5–3% of our consumption, and as this is both commercially viable as well as most of the world is talking of now the sustainability. We are taking some special measures where we intend to spend money both on the solar as well as wind power, so that our greening could be increased. And it looks like maybe our first target is to complete or to reach our green power from 2.5% to about 25–30%. So that's the intention this year. So there's some small steps already taken, and we are negotiating, we are discussing with the various service providers where we could enhance this, and we are hopeful that within the next 1.5 years we should be in a position to complete this as well. So with this, our total capex, which has been estimated for about 1 year, I say practically 1 year or maybe 3–4 months in addition to that, we are estimating it to be in the range of about 2,000 crore rupees. I think which will definitely give a good stimulus to the organization in terms of strengthening our shop floor, in terms of our capability, in terms of debottlenecking, and also in terms of improving the overall quality and reduction in the utilities, etc. I think this is my initial remark. We can move on to the question answer so that whatever are your specific queries we can address or we can discuss it along with that. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditi Loharuk from CD Equisearch. Please go ahead.
Good afternoon, sir. So my question to you is that your inventory is almost doubled from FY23. So could you please tell us the reason behind this?
Yeah, so as I mentioned earlier also, last 2 years our cotton inventory has been much less because of the prices. We were not very confident to store it or not. So this year is our normal inventory buying, and since the season ends practically towards the end of March, we could cover most of our cotton, so that's why the inventory is on a higher side.
Okay, so you see the demand also to get back to normal.
Yeah, for us, I think on the spinning side also we are running all our 100% capacity utilization. So one is the pricing factor which has to be aligned to the market, but in terms of demand, I don't think there's any issue for a company like Vardhman. We are doing reasonably well to that extent.
Okay, sir. Thank you.
Thank you. The next question is from the line of Himanshu Upadhyay from Bugle Rock PMS. Please go ahead.
Yeah, hi. Good afternoon. Am I audible?
Yeah.
Yes, sir, you're audible.
Yeah, so my first question was, till the last quarter, we announced a small capex, but even then we had much more skepticism, on how the industry will play out, and especially with the cotton prices and the narrowing gap, between the Indian cotton and US cotton, and what will be the government policies and all those things, and hence we wanted to be more cautious. But what has changed so dramatically that we are taking a 2,000 crore capex within 1 year? Can you just give your thoughts on how the change of thoughts has happened or evolution of thought has happened, and what was the reason for that?
Okay. I think whenever we had shown that skepticism, we were also very clear there are lots of plans we have on the ground where we want to implement as the confidence improves. So a couple of things where we feel the confidence is improving. One, we have been talking last 2–3 years that the trend of China plus one is there, and lots of brands are coming to India where they want to have the second source in addition to China. That trend continues for the organized sector, and I think we are also finding that trend to be very, very positive, where more and more brands want to come and they want to source from India. Two, I think it was a factor we wanted to look at and understand what could be the timings where we should announce a bigger modernization and expansion. And we were also looking at it. So one change which has happened in this period, the government has announced a RoDTEP under the advanced license. So the disadvantage of cotton import with the duty is relatively much less today compared to what it used to be. If there was a duty on India and we do not get the RoDTEP also, it was impossible to work on with imported cotton without any RoDTEP on that. But I think definitely the government has responded to the industry needs. They are under even advanced license, they have allowed the RoDTEP, which is definitely one of a big step, because even if now the import duty is there, should not be, but you want to import, I think the relative disadvantage has come down. So that is one big step which is boosting the industry's confidence. Two, as I mentioned, the customer requirement. Third, I think profitability is one part, margin is one part, price is one part, but having said that, the kind of orders which are coming in and every customer wants a delivery within 30 days, 45 days, we require to relook at our entire thought process as well as the organization. How do we cater to these demands? All these customers which intend to come to India, there are two requirements. One, the variety of products, especially the new products, etc. Two, the variety of fibers. Now, to cater to both, and both things should happen within 30 to 45 days on delivery expectation. I think catering to that or thinking about that, we took one special efforts to look at how do we reorganize ourselves and how do we look at catering to these customers. So there was a comprehensive plan which will not only deliver on these, but was also related with the productivity improvement in terms of the overall machine productivity as well as manpower productivity. So that's where I think this project has been taken. Last 2-3 years, we didn't do much. At the same time, we've always been mentioning there are issues on the government policies, in our view, as per the cotton import, etc. But with some relief or some thought process which we have given, probably that feeling is there, the disadvantages which has been created may be less or eventually it may go also. So I think to that extent, we were much more confident in the announced expenditure.
And on the technical textile, producing this 15 lakh meters, can you specify what type of products you would like to produce? Because that's a very big segment.
Incidentally, our fabric business at Sagarika is also just joined us, so I'll request her to reply you on this.
Hi, good afternoon. So this is regarding technical textiles. So our first phase is going to involve a capacity of about 15 lakh meters per month, and 70 to 80% of this will be polyester, and 20 to 30% would be nylon. So the applications would be varied. There would be sportswear, activewear, but then there's also industrial applications such as tents, parachute fabric, defense application is also there. So customer base would be varied. It would be some of our existing customers like Columbia, Decathlon, but then there would also be other sports customers. And then, as I mentioned earlier, defense and industrial applications. Just to give you a sense that here we felt that there was a big opportunity that was available for Vardhman, because as Mr. Neeraj Jain already mentioned, there was a China plus one wave that we feel that a lot of brands, a lot of customers want to look at alternatives other than China. And then in the Indian market itself, there was a vacuum in the market due to maybe not as many organized established players present. And we also felt, as Mr. Neeraj Jain again mentioned, that if we look at world versus India, so India, we have 80% cotton and 70 to 80% cotton and 20 to 30% man-made. In the world, this trend is exactly opposite. So we wanted to capture all these trends. Do you have any follow-up questions?
Yeah, so one follow-up. So do we stay in the existing capacities are catering to any technical fibers, and how big are those capacities? Okay. And have we already got the customers, and how different would be the modes, or let's say the challenges in this business versus the cotton-based fibers?
Right. So currently we do not have technical textiles. So this would be our first foray into technical textiles. If we compare it to what we've previously done, so if we compare it to cotton, it would be, I wouldn't say it would be more difficult, it would just be different. So we have to build up internal capabilities, and also sourcing will be different because some portion, like it's no longer natural raw material that we would be sourcing, it would be man-made. So there would be certain differences, and we would be building up internal capabilities in order to meet the same.
Okay, thank you from my side. If I'll have any other questions, I'll join back.
Sure.
Thank you. The next question is from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you for the detailed brief on technical textiles. I would also like to understand the level of integration that you are building in this segment, whether you will be sourcing fiber, yarn, from what level, and are these capacities, had you already spoken to some of the customers who would be interested in this capacity, and what are the technological collaborations that would be needed, if at all required?
Hi, good afternoon. So currently we are not looking at manufacturing filament on our own. We would be sourcing the filament, and then we are planning to have weaving capacity and processing capacity in-house. As if you're asking about what the synergies would be with existing customers, so we have kept a few of our customers in the loop, and they are enthusiastic about it. But like I mentioned earlier, while we would be catering to some of our existing customers, but we also want to diversify and grab new markets and new customers.
Okay. And what will be the approximate cost of setting this technical textile business?
So in the first phase, we are looking at about 330 crores. And once we are able to establish this, then we'll think of setting up a phase 2.
And will it be getting PLI benefit as well? Any government incentives that you are looking forward to in this?
No, we will not be getting that. I think the PLI scheme is no longer available.
It's not available to us because that's for a smaller companies, and this project is going to be a part of Vardhman Textiles only.
Okay, understood. The overall demand scenario in fabric, is it much better today as compared to in the past 6 months? How are you looking at the outlook of the fabric business, your existing fabric business in the near to medium term, and are there any capacity expansions lined in the existing business as well?
Sure. So if we compare to last time, I mean, it has been a very difficult year, and the team have done a fantastic job in trying to grab new customers and enter new territories in order to maintain a certain volume. If we think about demand outlook, then it seems that the worst is over. However, recovery is still going to take some time. There are some headwinds and there are some tailwinds. If we look at tailwinds, then we can see that a lot of the big brands, their inventory levels, which were very high after COVID and even last year, that inventory level has come down. So at the retail level, also it is supporting, which means that now supply chain is relatively dry and they are starting to replenish. So that would be tailwind. But if we look at headwinds, the interest rates, the inflation, and also the propensity of the consumer to spend on apparel. That continues to be a challenge. So I think we can say that the worst is definitely over, and we can hope for a better future. Apart from that, we are also looking at new customers and new products. So we're working towards more innovative fabrics, whether it is more blends, so that we can compensate the lack of demand. You also asked about whether we're planning to enhance capacity in our conventional fabric. So as of now, yes, we are looking into certain debottlenecking operations, because we have been, if we look at this financial year, our utilization was about, if we look at the full year, 88-90%. So which does mean that we are looking to debottleneck in certain areas. This debottlenecking will allow us to enhance capacity while also improve serviceability to our customers. So that's what we plan to achieve.
5% capacity enhancement would be there on this with debottlenecking?
It will be very small actually. Some of it would be normal capex as well. I think we can let you know in the next few calls.
Okay. Thank you, Savit, and thank you, and all the best. Thank you.
Thank you. The next question is from the line of Avnish Chandra from Smith Limited. Please go ahead.
Thank you very much for taking my question, and congratulations management team on improved performance. Sir, first thing, last time we have talked about 200 crore small capex. That is separate than what we have announced to today.
Yeah, that was separate.
So that was a very small project of 16,000 spindles. So that is still going on, or that capacity is already added?
That's still going on. All that capacity will be available, I think, by December, January this year.
Okay. And out of this new...
This 2,000 is over and above that 200.
Okay, understood. So that a small capacity addition will be completed by December this year?
Correct.
Okay, and new 50,000 spindles that we have talked about in new capex, that it will take another year from here to get commissioned?
Correct.
Okay. And sir, you talked about around 1,000 crore capex, which includes 50,000 spindle and modernization project. So this 50,000 equivalent spindle, how much that capex would be separately?
So there are two ways. One is like a new open-end project is coming, which is equivalent to about 35,000 spindles. That project cost will be about 300 odd crores or so. Mm-hmm. In addition to that, the remaining 17,000 spindle is a modernization of existing spindles, where we will be putting up the new spindles instead of the old spindles. And as a result of that, we are adding net 17,000 spindles. So it's not only a cost of 17,000. So we are replacing almost 60,000 spindles, and we'll be adding close to about 78,000 spindles new. So the net addition will be 17,000.
Okay. Understood. So that's what total is huge, 1,000 crore.
Correct.
Okay. And ma'am was talking about 300 crore capex on this first phase. So 15 lakh meter per month is your first phase, or there is a phase 1, phase 2 in this 15 lakh meter fabric technical textile?
So I was talking about phase 1. You're absolutely right. Phase 1 would be 15 lakh meters per month, and that entails a capex of about 330-340 crores.
Okay. Okay, and then one more thing, what would be the asset turnover in this business, in technical textile?
What would be our
asset turnover? How much revenue we can generate after first phase get completed? So we are putting 300 crore capex. How much revenue we are expecting when this new project of 15 lakh meter fabric get commissioned in a year?
So we can expect a revenue of about 200 crores.
Okay. So in this business, asset turnover is less than 1.
Yeah, it will be less than 1 because we are adding lots of rooms where the advantage doesn't come in.
Okay.
But once we go for the second phase, probably the asset turnover, we might touch about 1:1 in total project.
Okay. And margin-wise, it will be similar to our company margin, or this will have better margin?
Similar.
Okay. So again, the margin would be what we always guide, 16-18%, this kind of margin will be generated. Okay. And sir, one last question on the margin side. We are still far away from our guided or earlier years margin. So what is expectation there? It will take another year to reach that. What is your outlook on that?
My feeling is, if we look at the USA and Europe, almost 20% drop is there in their imports. Till the time the normalization happens in the entire world, the margins won't improve. On the spinning side, still, I think most part of the world, it is running about 70-75% spinning utilization. Of course, it has improved 8-10% in last 6 months. So I can only hope improvement in the margin in a big way once the normal utilization starts happening, which slowly is building up, slowly is picking up, but it may take maybe another 6-9 months. So I'm hopeful by the time we complete all our expansion and modernization, things should be far better than what it is today.
Okay. But all these projects, in this year, we won't get anything from this new capex, right? As far as capacity is concerned, everything will come into the picture in FY26.
Correct.
Okay, sir. Thank you, Jain sir and management team. All the best.
Yeah.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
So just your audio was weak. So capacity utilization in spinning for us, for Vardhman, in FY24 and quarter 4 FY24 was what, sir?
Almost 100%.
Almost 100%. Okay. Thank you.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Am I audible?
Yeah.
Thanks for the opportunity. Sir, pardon me in case if you have covered this in your initial 2-3 minutes of commentary. So typically, sir, given the current situation on demand and spreads of yarn, cotton yarn, in the exports and the domestic, how are these behaving? 2-3 questions aligned. One is the demand on the cotton yarn side, both export and demand domestic, and also the spreads on cotton yarn. How are they behaving? And what is your expectation going ahead?
Yeah. So the demand, both domestic and exported for Vardhman, is normal. And in terms of prices also are comparable between the two markets. There is, generally the gap of 2-3 rupees here and there. But by and large, the prices and the margins are aligned both in exports and domestic, and the demand is reasonably okay in both the segments. The gross margins as of now is in the range of about 70-75%, which normally the benchmark is always in the range of about 90 cents to $1.
Sure. So given the scenario today, and also there were currency issues in some of the countries in the globe, so has the situation eased now, and are you seeing some better inquiries or demand from the export side?
Definitely there is an improvement, and I mentioned in my initial comments also that from India the export is almost in the range of about 105-110 million kg per month, which has been a normal export for even though pre-COVID levels also. So that means the overall demand from the export market is okay. Of course, since the overall utilization in the entire world is still less, so that is where the margins are not improving. But as far as the export from India is concerned, they started achieving our normal volumes.
Sure. For one last bit, you mentioned in your commentary about China Plus One, you mentioned that we have been talking about China Plus One for last 3 years, and some of the customers are surely looking for additional source. So, sir, given your understanding and the experience in this industry, you being a leader in the industry, in your assessment in last 2-3 years, what is that, structural change which the industry and Vardhman both are going through? Because in general, the cotton yarn has been a very cyclical business. We have 1 or 2 good years followed by 2-3 years of, issues on the demand or cotton prices going up, the margins going down. So typically, the changes which has happened in last 2-3 years, how do we perceive the change in the industry today and going ahead?
So there are very clear trends and changes which have happened in last couple of years. To start with, one, most of the products demand is today for 30 days delivery, 45 days delivery. Earlier, someone will book the yarn for 60 days, 90 days. That time is over. So everyone wants a delivery in 30 to 45 days because everyone wants to reduce their inventories, and they are looking at a better turnaround of their product. So their first need is that the product has to be delivered in these number of days. 2, the number of fibers have started increasing, both man-made and different cotton, whether it's organic. For example, the organic cotton, there used to be one kind of organic. Today there are 8 kinds of organics. Similarly, look at polyester. There are 20 types of polyester today available. We talk of cellulose. There are 20 kinds of cellulose available in the system. So every customer, and then they want a mixture of this, so particular cellulose with particular cotton. So which means the overall variety has improved or increased in a big way. So that's another change which has happened, where we are forced to, 1, deliver it well in time, 2, at the same time have to have the differentiated products. Third, as these brands are coming to India, their requirement of new product is also very high. So which means they will get some ideas, you will have to generate some ideas. So both customer and vendor together, you have to keep generating new ideas so that new things for the customer could be provided. So that's yet another change which has happened, which generally was not there in the normal grey products, but we are finding lots of mixture of A to B, B to C, C to D, so that something new, something different could be created. These are the 3 changes from or fundamentals from the customer side. In addition to that, 2 major changes. One is on traceability, second is on sustainability. Now there's lots of fashion on the recycling products. There's lots of requirement of customer on reduction of carbon footprint. There is lots of requirement for them to stop using the fossil fuels or fuels, etc., etc. So that's on one hand. On second hand, they want a total traceability up to, given a choice, up to farmer. If not farmer, at least up to dinner. So the entire chain has to work on their logistics has to be worked out so that you are in a position to give them visibility on the traceability or on the entire supply chain. Now these are very big changes. And the last, not the least, the social compliances. As these brands are moving more and more to India, the requirement of social audit, social requirement is huge. And their expectation is also that all the organizations, wherever they are working, they should be compliant to that extent. So I think that's in a way a natural advantage which will go to the larger organization who can organize all these things. And all these customers will come from outside. Their another requirement is they want to consolidate their vendor practice. So they are not interested to go to 20 vendors for every different product. They want one product, one factory where most of their products should be available. And they also want their picking to be managed by the factory. So someone is buying 5 tons of, let's say, hazard from me. Picking comes, they want 7 tons, 8 tons, 10 tons. So I have to deliver them well in time. So whosoever has a larger capacity and a capability to switch to the product, I think that's an advantage which is naturally going from the customer to their side. Now, these are all changes where all these customers or all these brands which are looking at India as a serious destination. This is the basic requirement, and this is the reason we are rethinking on the entire model, and this is the reason we have taken up this kind of modernization, so that we already have lots of flexibility and capacities available to us. But I think we are re-looking at it entirely from a different angle and preparing ourselves for next couple of years.
Thank you, sir, for such a detailed response, and wish you all the best. Thank you so much.
Thank you. The next question is from the line of Akshay Kothari from JHT. Please go ahead.
Thanks for the opportunity. So how do you foresee the demand from China?
It's relatively less as of now.
Okay. And when do we expect it to, your views on the same?
They keep coming to us, so whenever the prices goes down, they buy from us. But I think one big change which has happened, if you look at an article, there was an article 3-4 days back only. In USA, they have drawn samples from various brands of the various retail shops, and they have tested it for the banned cotton of China. And they found almost 19% samples getting filled, given the name of the brand as well as the shop. But it looks like as the stringency of US would keep increasing on these ideas, the demand for Indian yarn will definitely keep increasing, even from China also. So I think till the time these issues are there, definitely I look forward, because as of now, though there is all these requirements, legal requirements are there, but still it looks like the people from China are managing this. But I think as the stringency increases, there could be or would be a larger demand of yarn from India, which is made out of the Indian or any other cotton other than China.
Okay. And what would be the debt taken for this capex which we have announced?
I think we are likely to take the debt in the range of about 50 to 60% overall long-term debt for this. In addition to that, whatever is the working capital, that generally will take about 50-60% of that as well.
Okay. And sir, I missed there was some disturbance. This is a brownfield capex, right?
This is all brownfield.
Okay. And sir, lastly, what is the application of this technical textile fabric? I understand 80% is polyester and 20% would be nylon, but where would it go?
Hi. Hi. So there are different applications. So one would be sportswear or activewear. So if we look at the raincoats that we wear, the down jackets, so the fabric that goes on the outer side of it, that would be one functionality. Then there are also industrial applications like belting, luggage. Then there are also defense applications. So there are different segments, and this is an area that we are going to enter into. So some would be existing customers, but a lot would be new segments and new customers.
Okay. Thanks a lot and all the best.
Thank you. The next question is from the line of Riddhesh Gandhi from Discovery Capital. Please go ahead.
Hi, just to get an understanding, how are spreads actually like currently in the cotton spinning compared to the Q4 and Q3 of last year? And if you could give us a view going ahead, if you see further normalizations happening in the spread.
Sorry, I'm still not clear on your entire question.
So I was asking about how the spreads are currently.
Right. So spreads, third quarter has been a little less. Fourth quarter spreads were better. But again, I will not say it happened because of the yarn prices improved. It happened only because the cotton prices came down. So spreads are a little better in the fourth quarter compared to third quarter.
And any outlook going ahead as to can you expect a normalization to actually happen in the spreads, and what's going to drive that?
As I mentioned, till the time the utilization of spinning doesn't go to about 85-90%, the improvement will not happen. So we have seen last 1 year the slowly improvement has started happening as the consumptions are increasing. One thing is very clear, and I mentioned in the last call also, all the brands, there is no brand now who is talking of still the destocking. So everything is over. Now brands are buying their day-to-day purchases on a regular basis. So which means this much of demand which is there today should continue, and it is to improve only. It may take maybe next 2, 3, 4 quarters, 2 or 3 quarters in my view personally for the normalization of demand, but definitely things are improving quarter by quarter.
Good. And the current levels of utilization across the industry would be how much?
72%, 75%.
75%. Understood, sir. Thank you. That's all from me.
Okay.
Thank you. The next question is from the line of Akshat from Niveshaay. Please go ahead.
Okay, thank you for the opportunity. I want to just ask at what capacity can technical textile can be run in future when it is ready?
It all depends upon how our product goes, what kind of demand, what kind of margins are we looking at. We feel for the domestic market, since the synthetic has to increase only, so there is a vacuum available as of now. So we are putting ourselves in project in hope that it should be commercially viable and we should be in a position to make money also with the right product. And once we are in a position to establish the product and the margins are normal, then I don't think we have any limitation or any thought process that we will not be expanding. So we'll keep evaluating and looking at it in the future.
And is it that it can produce extraordinary margins in comparison to cotton yarns?
It can, depending upon what product, because slowly a part of this will be going in towards more and more technical textile, maybe the fire retardant and those kind of products. In case we are in a position to establish that and make that, maybe not the 100% capacity, but a part of that capacity going in for the very, very specialized application can definitely or will definitely give a much better margin.
Okay. Thank you.
Thank you. The next question is from the line of Ritvik Sheth from One Up Finance. Please go ahead.
Yeah. Hi, good afternoon, sir. So just one clarification. Earlier in the call, you mentioned that the spread, yarn cotton spread is 70 to 75 cents per kg. Did I hear it right?
Correct.
And this is mainly because of increase in cotton price, which has led to increase in yarn price, and which has reversed to some extent in the current quarter, right?
So the margins were lower, but as the cotton prices came down, the yarn prices were stable. The margins to some extent improved.
Okay, got it. Okay, so thank you and all the best.
Thank you. The next question is from the line of Nirav Savai from Abacus. Please go ahead.
Hi, my question is regarding this power capacity which we are putting, and am I right in understanding that you are increasing your green power share from 2% to 25%?
Correct.
So what is the incremental capacity which you are putting, and what will be the capex beyond that?
So the capex, I think we haven't figured out the total capex because it's a different schemes we are evaluating, maybe the solar, maybe the wind, or maybe the hybrid, or a mixture of both. So tentatively we have kept a provision of about 350 to 400 crore rupees for this power for this particular year.
Okay, and what would be the cost saving which we have, and would this be done in the 18 months, right?
18 months at max.
And what would be the cost saving on the power side which we'll have?
It's all upon what and whether it's interested to for me to comment what would be the advantage. But I think most cases we are looking at whatever we are investing payback of about maximum 4 years or so.
Sorry, I didn't get you right. Can you just repeat it again?
Whatever the investment, our idea is to get a maximum payback of 4 years on solar power or on green power.
Okay. And on this new spinning capacity, you are adding what, about 50,000 spindles, or you are adding 70,000 and some part of your existing spinning capacity will be scrapped? I didn't get it right. Can you please repeat it again?
Yeah, so there are two projects. One is the open-end project, which is equivalent to about 35,000 spindles. It's a new project. And second, we are putting up about 70,000 spindles, and some 60,000 spindles will be scrapped. So the net there will be an addition of 17,000 spindles.
Okay, so about 1,000 crores will go behind this.
Yeah.
And technical textile is another 300 crores. Hello? Hello?
Yes.
Yes, so I'm just asking, the technical textile part is 300 crores, new spinning is about 1,000 crores, and
Correct.
about 300 to 400 crores will go behind power, right?
Correct. And plus some debottlenecking as well as modernization in our fabric region. close to about 150 to 200 crores.
Okay. All right. So that's it from my side. Thank you.
Okay.
Thank you. The next question is from the line of Abhineet Anand from 3P Investment Managers. Please go ahead.
Yeah, so just on the CapEx, good to hear, new round of CapEx coming for the company. Just trying to understand because it's not totally greenfield, some of them is modernization. In terms of asset turns, obviously, spinning is less than 1, and the mine-made fiber that was talked about is also less than 1. So, I mean, this 2,000 crore in terms of financial numbers, let's assume over the next few years, and the ROC on that, any color on that, if you can highlight?
I think on the top line, as you mentioned, because lots of modernization which is happening, which may not increase the overall top line. And if you look at the expansion of 50,000 equivalent spindles and the fabric, the overall top line may increase by about 500-700 crores only. So which means on a capex of 2,000 crores, we are talking of maybe 0.3 or 0.4 at best capital turnover ratio.
And these will have
it will be more in terms of bottom line. For example, with solar power, we are not going to increase any top line, but I think it's an all improvement in the or reduction in our cost of electricity. So the margins may improve, but the top line numbers may not increase.
Sure. I mean, that is the reason I said modernization will probably, and the green power will give that. Secondly, sir, if you can provide the broader breakup in terms of yarn and fabric, which typically we get from the annual report, but if it is 4Q, probably if you can give those numbers.
बस as a matter of policy वो आपको balance sheet को derive करना पड़ेगा.
Okay, or else if Tapasan can provide the average fabric and average yarn realization for the year, that would help.
We are not doing it separately. So the data cannot be provided as of now. Beta, we are just monitoring at company level only, textile as a whole.
Okay, last bit, sir, this debt that will be taking, will it be normal debt or some lower cost of debt will be there?
The part of that could be the lower cost as well, because some of the projects will be coming in Madhya Pradesh, that will be open-end projects. So there could be a possibility a part of the debt could be some subsidized also, but that will be very, very small part. Most part of the debt will be the normal debt.
Okay, sir. Thanks. Those were my questions.
Thank you. Ladies and gentlemen, you may press star and 1 to ask questions. The next question is from the line of Rahul Soni from ICICI Bank Limited. Please go ahead.
Hello. Yeah, thanks for giving me the opportunity. Sir, just one question. What kind of freight increase we have witnessed due to this Red Sea crisis?
Definitely, the freight increase has happened, especially to the Europe and Latin America. But fortunately, our overall shipment in that region is much less as a company, because most of the shipment of yarn as well as fabric that goes in within the Asia only, whether that's China, Sri Lanka, Bangladesh, etc., Vietnam, Thailand, those countries. So I think though there is an absolute increase in those freights, but our overall kitty of products going through that is relatively very less. It's not really have a big impact on us.
Okay. So what percentage goes to the Europe as a direct export?
10%.
Okay. So if just want one more thing, so you saying that you are witnessed in the terms of absolute numbers. So for that particular shipments compared to previous charges earlier than this issue escalated. So what was the percentage change there?
For the freight?
Yes.
Doubled.
Okay, just double.
Thank you.
Thank you.
The next question is from the line of Monish Ghodke from HDFC AMC. Please go ahead.
Hello. Thank you for the opportunity. So this 2,000 crore capex which we are doing, if I consider cost savings as my earnings, margin expansion as well as electricity cost save, then what kind of ROC we have in our mind over a long-term period?
Primarily, as I mentioned earlier also, so primarily the idea was not only the cost saving, the idea was to create the capability to produce the differentiated product or to improve the overall delivery. That was the idea where we started looking at this. But having said that, all these modernizations should definitely bring in the improvement in the overall system. So it's very, very, if I look at only the cost saving potential and look at all these modernizations, none of this will make sense. But if I include that with this, I should be in a position to gather much better business from a much better customer. Probably it's very difficult for me to put it in as a number that this is the return I'm going to expect from this modernization. But definitely, as we are seeing, last 1 year has been very tough. In spite of that, at any stage, if I look at my 30 to 40 days delivery, there's always a challenge because huge pressure from every customer to deliver the products, which means this trend is changing or is increasing. There are lots of opportunities where we're missing the business because we are not in a position to deliver. So I think that was the idea where all these modernization started happening. But if you ask me that what is the payback of this or what is the improvement in the numbers only because of this, probably it will not make any sense to us.
Okay. And so since our fabric capacity is also operating at almost full utilization, so will we be planning capex in that also going forward once demand improves?
Yes, we are. As mentioned earlier, there are some debottlenecking activities that we're planning to do. So we also understand that we're at a good capacity utilization, and we are this year itself we would be looking at certain investments.
Okay. Thank you.
Thank you. The next question is from the line of Apurva Sharma from Bugle Rock. Please go ahead.
Yeah, hi. My questions are on the technical demand-made piece of the business. So we have announced the capex. Just wanted to understand in terms of, I know it's a bit early, but in terms of customers, where we plan to, sell, is there any, initial sort of set of orders or, inquiries that we have been working on, and what part of it, or is it we are building, there's a vacuum and then we'll just set up and then we'll see? I mean, what part of it can be, there might be some traction initially, and I have follow-up on the same. Yeah.
Right. So as mentioned earlier, there are some synergies with existing customers. So we have been in touch with those customers in order to get some insight, product specifications, what products they are also looking for. So that would be some portion. It would be difficult to give you in black or white that what percentage would be existing and what percentage would be new. But rest assured, we also feel that because the existing customers are present and are enthusiastic about this product, that we would be able to gain traction maybe sooner than what would have been if we didn't have any customers.
Okay, and just what sort of time frame are we looking at to stabilize? Again, it's too early, but just wanted your sense on the same based on the conversations that we are seeing.
So 1 year from it will take us 1.5 years to commission, and then let's assume 1 year from that. So I think take a guidance of 2.5 years for us to fully establish the product.
Thank you. The next question is from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you for the opportunity once again. On this fabric technical textile foray, I understand that you were looking at expanding the target audience for the business and the company. Just wanted to understand why the asset turnovers will be lower in this business and why the margins will be lower. It's a special product. Not many people make it. So why the margins and asset turnover will be lower?
We didn't say the margin will be lower. We only said the asset turnover ratio will be lower because lots of these products will be polyester based or the filament based. So the prices of that will be determined by the polyester or the filament prices only. So asset turnover could be less, but we are not saying the margins could be less on this.
Okay, so margins could be upward of our company average margins can be eventually when you establish?
Of course, yes, from the overall company's margin, it will be better because in any case, the fabric margins are better than the overall company's margin. So it will also be better.
Oh, thanks for this clarification because I was thinking why it should be lower. Thank you. Thank you so much.
Thank you. Ladies and gentlemen, we will take that as the last question. I now hand the conference over to the management for closing remarks.
So, thank you very much on behalf of company. I think we have seen a very, very difficult time and we have made all the earnest efforts to come through or to pass through this time successfully. And I'm happy to share, of course, the margins are less. We have the issues and challenges in terms of overall profitability, but definitely in terms of customer satisfaction, in terms of developing new products, and in terms of shop floor management, or in terms of the cost saving potentials or the ideas, we have been working continuously in this difficult time so that because all these difficult times give us lots of energy or lots of ideas to sell these, lots of conviction to sell these ideas to our people, and the entire management is working day in day out to look at what more improvements we could bring in our overall system. I'm sure the overall demand started improving last 2-3 quarters, and that trend should continue. And hopefully, maybe next 2-3 quarters, I think once the business becomes normalized, we are geared up and we prepare ourselves for the next phase of improvement. I'm sure the moment things start improving, we will definitely look at a much better margin from today's level. So I thank all the investing community who has always been with us and had the faith on us. And I'm sure as management, I assure you that whatever is possible in our hands, we are working day in, day out, and we are always looking at the improvements internally, whichever area it is. So thank you very much once again, and look forward maybe the next call after a quarter or so.
On behalf of Batlivala and Karani Securities India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your